Hello traders, welcome back to a new episode. RALLYTOP Investing 3.2 SMC Masterclass here. In this channel, we teach struggling traders how to become consistently profitable in the market with our simple, straightforward strategies. So if you are new to our channel, please consider giving us a like and hit the subscribe button and become part of the family, and then turn on the notification so that anytime we upload a new video, you'll be notified about it. In today's episode, I want to take you through the 3 most important steps that a trader needs to take if you want to become consistently profitable in the market using the smart money concept. Look, the market is complex enough, and I do not expect you to make it any more difficult or harder. You need to fashion out a trading system that is simple to replicate every single day. And that is what we are going to do in this video. So you need to pay attention and stick with me to the end of the video. Now, the first thing a trader who wants to trade with a smart money concept needs to do is to identify the structure of the market, what's going on in the market. Now, in this market, let's assume that we are in an uptrend. Like for example, price is coming below just this way. Let's assume. And then price created this structure here and then went up to break this high. Once the high is taken out, that will be called a break of structure. And now, after a break of structure and price created this new high, you need inducement for this high to be confirmed as a valid high if you are trading with the smart money concept. And where is the inducement? Well, your inducement is right here. If you don't know how we identify our inducement, you can get back to our playlist, and you have videos there that we talk about inducement. Now, so price took out inducement right there. And after inducement has been taken out, you want to mark out your areas of interest. And there are only 2 areas of interest that work within your trading range. And I want you to understand that very, very well. The first one, after inducement is taken out, is known as the decisional area of interest. And the extreme one is actually known as the extreme area of interest. Now, the decisional area of interest is low probability in that it is 50-50, okay? Whereas the extreme area of interest is high probability. Now, there are times when the extreme area of interest is the same thing as the decisional area of interest, okay? So now we have mapped our inducement right here. Like we said, we are in a bullish structure, like I said before, and inducement is taken out there. So once inducement is taken out, you want to mark your area of interest just like I said. And so after inducement, you mark your area of interest. In this case, we have only 1 area of interest. If we had 2 areas of interest, then you will need to wait for confirmation on the first area of interest, which is your decisional area of interest. But the extreme area of interest, if everything is mitigated, you do not need to wait for any confirmation. All right? But because we have only 1 area of interest here now, which is both our extreme and decisional, we do not need to wait for any confirmation because we can find out that everything has been mitigated below it. Whatever that will make price to blow through this very area of interest will mean that this uptrend will be converted to a bearish structure. Now, you need to observe the way price is behaving at your area of interest, because this will determine the type of entry model that you are going to be using. The forex market is not one size fits all. Your entry model will depend on how price is behaving around your area of interest. You need to pay attention to it. Okay? After this video, I will do some more videos concerning entry models that you can use in the market depending on how price is reacting at your area of interest. Now here we are taking a direct entry, and one thing I want you to observe is that whenever you see price coming down into an area of interest such as this, and then it pushes up backward, okay, and maybe takes out the high or not takes out the high, but it has a valid pullback and then comes back down. If here you had a candle wick and price comes down to take out that candle wick with another candle wick, okay, please be ready, because that is a high probability scenario that price wants to go higher. So once you see price takes out the previous structure low, which is a wick, a candle wick, it takes it out with another candle wick after pulling back up. It has to be a valid pullback. Once it comes back down to take out that previous structure low, which is a candle wick, with another candle wick, that tells you that price is ready to go higher. 80 to 90% of the time this will happen. But I want you to also consider that in the forex market or the financial market, nothing is set in stone. So that's what you want to see. That's the first entry criteria that we are going to be discussing about in this episode. In subsequent episodes, we are going to be discussing about other entry models depending on how price reacts at your entry zone, so you can understand properly. Okay, so with that being said, once you find that, and as you can see here, let me just show you what is happening here so you can have a better idea. Now price is coming from above there, and price printed this low. As you can see, this low took out this previous candle's low. Okay, so this is the lowest low, and after that price pulled back up to this high. When it pulled back up to this high, it came back down, as you can see here. Now what did it do? It took out this previous structure low here with what? A candle wick. All right, remember what I showed you here. Look at it here. This is exactly what I showed you here. It took it out with a candle wick. This is a powerful way to tell you that the smart money wants to move higher at this zone. And remember that this zone is serving as both extreme and decisional area of interest. I hope you understand that. Look at it here. This is the low, and price took it out with a candle wick. That's a sweep. And after that sweep, price retraced on that candle and closed above. Can you see that? So once you find that, this is a powerful scenario for you to enter your trade going long. And how do you take this trade? Well, there are a few ways you can take this trade. For example, this candle wick is much more than this candle body. So you can actually use this candle wick to enter your trade. Mark it out as your area of interest, and you are waiting for price to come and tap into this area of interest, okay, and go higher. That's one way to enter this market. I don't want to confuse you with a lot of complexities, because we want to take this entry model one after another. In our subsequent editions, I'm going to be doing videos based on entry models so that you can understand how to take it. Remember, this is a direct entry model. You do not need to switch to any lower time frame. I'm using the 1H here, and I'm taking my trade directly using the 1H, but considering the market behavior, the price behavior around the entry zone. That is key to what we're talking about. Now, let me take you to the live chart and show you what I mean. Okay, so take a look at this. This is Euro USD 1H time frame. Now, as you can see, we are pretty much bullish. And what I want you to do and always do when you get to your chart is to mark the recent structures of the market. If you can look at this chart now, if I ask you, are we bullish or bearish? Of course, this is bullish structure. Why? Because look at where price took our structure here. It took out that structure with a candle closure. It has to be with a candle closure for it to become a valid break of structure. And so that's where you have your boss there. And after the boss, why is it a major structure break? It is a major structure break because this is a valid high when it took out inducement. And where is the inducement here? Well, inducement is somewhere around here. So once inducement is taken out, your high or low is confirmed. And after that, price travel higher. And now, where is your major structure low here? Look at your major structure low right here. So you now have your break of structure, and then after the break of structure, you have a new high in place. So for this new high to be confirmed, it needs inducement. And so where is the inducement here? Of course, you can see your inducement is right here. So inducement is here. That's your major inducement in the market to confirm this high. So once inducement is confirmed, like I said to you, there are only two areas of interest that work within your trading range. And so where is your trading range? This is your range low and this is your range high. Simple. Now, after inducement, let's mark the areas of interest on the chart. Now, the first area of interest will be this one here. After inducement, and this is known as decisional area of interest. Now, price tapped on this decisional area of interest and went higher. Remember, I said to you that this is a low probability zone. For you to take trade on this decisional area of interest, you need to get a confirmation on your lower time frame. And now, after then, where is your next area of interest here? Well, this is your next area of interest from this high. From this high up until this low is your decisional area. It's your extreme area of interest. And I said to you that that is 50-50. So you stretch it out. Now, for this one, like I said before, you need a lower time frame confirmation because this is decisional area of interest. Now, if you look from this low here, all the areas of interest are mitigated. All the order flow. Now, remember the order flow is primary and the order block is secondary. And as you can see, price has already mitigated this one. This one mitigated it. And now we cannot use that. So if we use the next order flow, this one here is also mitigated by this pullback here, as you can see. So all of these are mitigated. Only this one is left. Okay? So that is why we are using this as our valid extreme area of interest. Now remember the steps I've taken. Number one step is to read the structures of the market, and I have read it, and I've said we are in an uptrend. Okay, so we want to buy the market only. That's what we want to do, only. And therefore you can see as price printed this high, we want to take out inducement first of all, and then our two areas of interest marked out. The first one is 50-50. You need confirmation for this, but the second one is extreme, especially as you can see here, everything here is mitigated. So this is the area of interest that we want to actually wait for to take our trade directly. Okay, now there are two ways you can enter your trade when price comes to this. This one taps into this decisional and go up. It went up a little and failed, and then came straight to this extreme area of interest. Now, as price came into this extreme area of interest, I want us to observe price behavior at this area of interest. Is it worth it for us to go long from here? Now, price This is the first time price tapped into this area of interest. But before price tapped into this area of interest, look at the behavior of price. Let me show you something here that you need to observe. Like I showed you on that diagram, price is coming from up there, printed this high, printed lower low, and then printed this lower high, and came back down here, printed this low. But this low did not mitigate our area of interest, and price went higher and printed a high and came back down. Look at the way it came back down. It took out this previous structure low here. Now remember, it has to be a valid pullback. Like I said to you, this is a valid pullback in the market before price came back down to take out the structure low here. Let me delete this. Look at the way it took out this structure low. Look at the way it took it out. This is a wick. Price came, took it out with what? A candle wick. It swept the liquidity resting below this low and this low. All right, can you see that? And after sweeping that liquidity resting below the low, the two lows, these are equal lows, it took them out, and then price went higher. Remember, this is your chalk, but it has to be with a candle closure. Right there, it did not give you candle closure. Here is candle closure here. So we have a valid chalk in place. Now, because this candle swept the liquidity here, now you will have to use this candle wick to enter your trade directly. Remember, we are trading directly, and price came into that, tap into it, and you would have taken your trade from there going long. This will be where you will place your pending order. It's advisable for you to place your pending order and wait for price to come and tap into that your pending order and take you higher. So your first target, your first TP will be this high here, and then your next point will be this. Okay, so you can begin to trail your stops after price has closed above. I want you to understand that very, very well. So this will be your first target. Don't forget about that one, and that will give you about 4 point something R. And as you can see, price came, tap into that our TP, and then you can decide to take your partials here, or like I said, you trail your stops once it closes above. So this is the way for you to trade using this entry model that I'm showing to you now. This is a very powerful entry model. Go back to your chart and check. Anytime you find this kind of entry model, it always works out. Most of the time, let me not say always, most of the time it works out. 80 to 90% of the time, you'll find price reacting off of that kind of zone. Okay guys, that's where we are going to draw the curtain. But if you are new to our channel, please consider giving us a subscription and turn on the notification so that anytime we upload a new video, you'll be notified about it. And if you enjoyed the content, please don't forget to give us a like so that the algorithm can be able to show this video to more traders who also want to know how to trade the market and become profitable. And if you are yet to join our free Telegram channel, please do so just immediately. And if you want to join our VIP community to learn more, well, the doors are open. All right, guys, thanks for watching, and I see you in our next episode.